Hello, thanks for joining me today on my channel. This is Discovering My Dividends, and today I want to talk about why I started a dividend portfolio in Canada and why I like using Canadian dividend stocks. Before I get started, I just want to say as a disclaimer, I am not an advisor, so do your own research. And if you are not doing research, make sure you get an advisor if you're going to touch on anything that I use in here. Okay, apparently I'm having camera issues. All right, so number one thing on my list here was reliable income. So in the future, I want to have that reliable income, and Canadian dividend stocks tend to be reliable, or at least certain ones are, and you can do some research on that to find which ones work best for you. Dividend tax advantages. So check this out because there are some dividend tax advantages in Canada that can help you lower your taxes if you're getting your income through those dividends. You can also invest in a TFSA. So inside the TFSA, tax-free. Now, there are rules around trading, so make sure you know what rules CRA has for investing in a TFSA, because if you don't and you overtrade, they will tax you on that completely. So be aware. So stable companies, there's lots of stable companies, in particular the banking sector is one. In the past, utilities and telecom have been fairly stable, although telecom is going through some issues right now as far as price, but dividends are still paying out. Utility companies, pretty consistent that way as well. Dividends that grow over time. So there are companies that not only does the stock price have that potential to grow, but they grow their dividends. So the dividend may start at 10 cents when you buy it, now, and move up to 25 cents in the future. And in the past had been, starting out at like 5 cents a share. So things like that, where that dividend is growing, and companies that have that payout ratio that is opening up to them paying out more, or they're companies that are expanding and they are going to have more income and therefore can pay out more of a dividend. So definitely check out that for an opportunity if you're wanting dividends for the future. Lower volatility compared to growth stocks. Well, typically companies that feel they can pay out a consistent dividend and have been paying out a consistent dividend, they know what their cash flow is. So their companies tend to be less volatile. And so if you find those companies that have been paying dividends for a long time, you are more likely going to have less volatility than other companies. So less risk, so on and so forth. There's still risk, but you're probably better off. Just want to go ahead and subscribe and like. That does help me out if you're able to do it. And also I do have a link down below for WealthSimple. I use WealthSimple as my online broker. I don't pay fees because I just do Canadian dividend stocks. And if that's what you're planning on doing, I think they're great because they're easy to use, and then you don't pay fees. Now, you can pay fees, so make sure you understand the fee structure if you decide to go ahead and sign up with them. And that brings us to our next topic of US stocks. They have a withholding tax. So a lot of people are big on getting into the US stocks for diversification and all kinds of reasons, but I avoided this just because that's kind of a hassle for me, and I'm very happy with my dividend portfolio being just with Canadian stocks right now. There is lots of reasons to diversify, but for my purposes, it serves my purpose. So don't be afraid of staying out of the US market, and if you do go into it, be aware of what extra fees there might be. Retirement and retirement planning, income without selling the asset. Well, a lot of times if you are into mutual funds at your bank and you're looking to get out of that, well, one of the reasons why when you sell a mutual fund, you're selling off the asset. So then going forward, you have less of an asset. So with dividend stocks, you maintain the asset, right? So if I have 1,000 shares of something, I get paid the dividend, take that cash, and I go spend the cash wherever I want to spend it. I still have those shares and I didn't have to sell them. So then again, the next time they pay out a dividend, I get that cash, I can go spend that cash. Or in this case where I'm getting dividends right now, I'm reinvesting them and then I get more shares. So that is definitely worth looking at. And of course, then we have the compounding growth for the DRIP programs. If you're building for that retirement, you can just buy those shares and then go on the DRIP program, and then automatically those will be reinvested in new shares. And that is really a fantastic way to grow without having to put a ton of stress on yourself as to how do I reinvest these, and making sure you do it again and again if you don't want to spend a ton of time always on your stock account. Although I do recommend that you pay attention to what's going on so you are aware if your portfolio needs attention. All right, so that's it for discovering my dividends. I hope you join me for the next video. We'll see you next time.